Welcome back, everyone. I hope you all had a fantastic summer. I'm Greg Shaw, here with your Wealthstone market update. Over the past few months, the markets have kept us busy. We've seen periods of strength, some volatility, and then the big headline in September, both the Bank of Canada and the US Federal Reserve cut interest rates. In today's video, I'll walk you through what happened over the summer, why September's cuts matter, and what to watch as we head into the fall. Let's start with how the markets performed over the summer. In the US, stocks held up relatively well. Growth and technology companies continued to lead, especially with AI and semiconductor demand staying strong. But we also saw weakness in more cyclical sectors, things like manufacturing and consumer discretionary, reflecting a cooling economy. Here in Canada, equities were more of a mixed story. Energy and resources helped at times, especially when global demand picked up, but trade tensions and softer consumer spending created headwinds. Commodities told a split story too. Oil was under pressure from abundant supply, but metals and gold found support from the expectation that interest rates would finally start coming down. So overall, it was a summer with ups and downs, but underneath it all, markets were clearly positioned for the rate cuts that finally came in September. Now, for the big turning point, September rate cuts on both sides of the border. The Bank of Canada lowered its overnight rate by 0.25% from 2.75% down to 2.5%. This is its first cut in years, and the bank left the door open for more if growth slows further. The US Federal Reserve also cut rates by 25 basis points, moving its range from 4 to 4.25%. Again, this was the Fed's first cut since it began its tightening cycle. So, why do these cuts matter? First, borrowing costs get cheaper for mortgages, line of credits, or business loans. Second, it signals that central banks are shifting priorities. Inflation pressures are moderating, but growth risks are rising, and central banks are now more focused on supporting the economy. And third, markets interpret rate cuts as a green light for equities, though the real impact depends on how much long-term yields come down. These weren't surprise moves. Markets had been pricing in cuts all summer, but having them actually delivered is significant. It changes the investing backdrop going forward. As we move into the fall, a few themes are worth keeping a close eye on. Economic growth versus inflation. Will these cuts be enough to boost spending and investment, or are we facing a sharper slowdown? 2. Labor markets. Both Canada and the US are seeing cooling job growth. If unemployment keeps rising, more cuts could follow. Number 3, global market flows. Investors are shifting back into equities, especially technology and emerging markets, but flows can reverse quickly if data disappoints. Number 4, corporate earnings. Margins will be tested. With slower growth, can companies still deliver earnings investors expect? The answers to these questions will shape how the markets finish out the year. Personally, I'm still bullish that we're going to end on a boom. So, to wrap it all up, the summer of 2025 brought us resilience in the markets, some volatility, and then a real turning point with September's rate cuts. Here at Wealthstone, our focus remains the same. Look past the short-term noise and stay committed to the strategies that build wealth over time. Stay diversified, stay patient, and stay invested. And remember, calm in the chaos. That's the Wealthstone way. As we head into Thanksgiving, I hope you're able to enjoy time with loved ones, sharing some great meals, hopefully some turkey, and take a well-deserved pause to appreciate the good things in life. Thank you all for being our clients, and I hope you have a wonderful holiday. Thanks for joining me today, and we'll see you in the next update.